to Galaxy Brains, the weekly podcast from Galaxy Research. I'm back to attack till my heavy bag bursts. You could see me on the street with a cold hard beat, or sitting at Pub Key holding cold card keys, cause we hold our cheese. And we're here this week with a special guest, Trey the Lion's here to speak. We never rest, don't forget these markets never close, so I'll be covering the space till the sun no longer glows and my voice no longer flows. Whoever's hating, send them to me. I've got plans to make Bitcoin great in 22-3 for the future, cause I'm different. Picture this dissident research misfit making mischief with some new financial instruments. Let's go! We're still here in these crazy days. Crypto's dead is what the fallacy says. Yo, the best is yet to come, so don't be mad when we say it's time for me to end this rap and start up Galaxy Brains. Got Galaxy Brains. As always, I'm your host, Alex Thorne, head of firm-wide research at Galaxy Digital. Happy New Year. We're here in 2023 to kick this off with an awesome show. We've got Beimnet, Abebe from Galaxy Digital Trading to talk markets as always. We're joined by Trey, Aslanian, also from Galaxy Digital Trading, to talk about crypto in general. And I'm going to share some fascinating data about crypto VC in 2022. But before we begin, please refer to the link to the disclaimer on the podcast notes and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy Digital or any of its affiliates to buy or sell any securities. Galaxy Brains 2023, let's do it. We're ready to go. All right, before we get into it with Beimnet and our guests, we released a report yesterday morning on the 2022 crypto VC scene, which showed, despite a big slowdown throughout the year, still the biggest year on record for crypto VC investment into crypto companies. Q4 was small, though. It was the smallest quarter since 2021, in 2 years since Q4 2021. At just over 2.4 billion allocated across like 370 or so deals. So obviously the macro and monetary policy environment is affecting VC investment. It's actually down across the board, not just in crypto VC, but still robust activity. So check out that report. It's on galaxy.com/research. A couple other interesting highlights. The later stage, the share of capital invested in later stage deals versus earlier stage deals is ticking up at over 40% in later stage, which is a little bit of a reversal from last quarter where it was down around 20% of the capital. When I look at deal count too, this is one of the really interesting ones. I like to look at pre-seed deals because they indicate the earliest stage of company. So a deal getting done at that stage typically means a new company. And the share of deals that were at the pre-seed stage has been falling for years, which in general, in my mind, has been sort of an indication of the maturation of the market, right? There was some different market dynamics in 16, 17, and 18 than there are today, right? There was no market infrastructure, for example, really outside of some exchanges in that earlier era. And so there was this huge opportunity for entrepreneurs to come in and build things like prime brokerage and custody and lending, et cetera. But for the first time that I've been tracking this since 2016, the share of deals that were done at later stages, so that's Series C and later, there were more of those deals than pre-seed deals for the first time in Q4 2022. I'd like to see more. I'd like to see that pre-seed deal count stabilize and show us that there are new entrepreneurs coming in to build new things. When we look at the deals and capital invested by subsector, right? So like Web3 versus infrastructure or mining, trading. Trading still accounts for the most money invested by VCs in Q4. But Web3 and DAOs, metaverse gaming, all that stuff, sort of NFTs all in one sort of bucket, by far the biggest share of deals at over 30%, deals done. So not capital invested, but deals done. So obviously some shifting narratives, still trading, investing, lending, exchanges are commanding the most capital, but clearly a lot of interest in emerging areas, right? Web3, NFTs, DAOs, gaming, metaverse and stuff. So more to come, but the last couple ones I'll talk about too is valuation. Valuation is down. It's down a lot, right? So with less capital chasing fewer deals. I think the founder-friendly environment that we saw in the last few quarters is sort of drying up a little. But fund sizes are up. So the funds themselves, right? So VC fundraising, not investing. Really notable here, a very, very tepid fourth quarter. But annually, the most ever raised at basically $30 billion raised by crypto VCs in 2022. So down a lot, but the fund count is up. The total annualized amount invested is up. And when we look at the median and average fund size, the average fund size now is over $100 million, and the medium is $100 million. It's a really crazy amount of money that's still allocated in this space in 22. So a lot of interesting stuff here. A tough environment we're entering into, I think, in 23 for the VC ecosystem, both investors and entrepreneurs alike, given the allocation is definitely slowed down from allocators into VC funds. You can see that in Q4 again. I think it was the lowest since Q1 2021 allocated into venture funds. And then there's not that many deals, 370 deals. That's down significantly from the high in Q4. Still a lot of interest, obviously, and a lot of money pouring in, but definitely slowing. And so we'll look to just, probably depressed valuations and founders unable to raise as much money, selling as little of their company as they were in 2022. So, but some interesting narratives to watch, no doubt. But that's it. Check out the reports on galaxy.com/research. Let's go to our friend Beimnet, Abebe, Galaxy Digital Trading. Beimnet, great to see you in the new year.
Thanks for having me. Happy New Year, Alex.
Yeah, how were your holidays? And
they were great. Would have been better if crypto rallied a lot more. But I'll take whatever I can get.
At least it was relatively quiet, right?
No middle of Christmas or New Year's, like calls or
dumps.
Anything like
there
that.
There was one, I remember, what would it have been, like maybe 2019, there was a pretty big dump right around the holidays that all the desks were sending color, like some poor person that was the one person keeping the lights on over the holiday.
Yeah. No, I mean, that's a story as old as time. Holiday season, teams are understaffed. A lot of young folks on the desks leads to crazy moves in certain instances.
Especially our markets, which are 24/7, 365. All right, so let's get into it. I mean, we talked a lot about last year on the last podcast 2 weeks ago. So let's instead maybe look at today and a little bit going forward. It seems pretty quiet out there. I mean, Bitcoin volatility, I didn't rerun the table today, but we might be at like the lowest ever on a 30-day historical volatility basis.
It certainly feels that way.
Yeah.
Again, it just speaks to an absence of activity, both buying and selling. I think a lot of the forced selling from miners has already gone through, and there's not really sort of new institutions like begging to pile into Bitcoin right now. In fact, honestly, I think the institutional side has been piling into traditional gold more so than Bitcoin.
Gold has been rallying.
It has
for a month and a half or so.
Yeah. It set its lows in like late October, early November. Around the mid 1600s, and it's now trading at like 1860 and change. It's kind of crazy in a year where, markets were down 20% and change, bonds were down 15% plus, dollar went up 15% and change. Yeah. Gold was actually flat in all of 2022, and it has started 2023 trading very well. I think, there's a number of reasons why it's trading well, but I think one, there's a general lack of positioning.
Yeah.
Two, I think you've had some central banks on the bid, as they're looking to move away from, sort of Western-based money. And also, just generally speaking, I think that there's pretty strong seasonals over the next, that have been happening. So those have been supporting kind of gold. Again, though, I think the same thesis should be applying for Bitcoin. And, I kind of think that eventually once people get comfortable with, counterparty risk and sort of more comfortable with the idea of investing in crypto again, I do think that you'll start to see the digital gold narrative start to take hold again, particularly if this year kind of plays out like I think it will, which is, very aggressive. Well, It really depends. But if you get a hard landing scenario, that's going to incite a very easy response from the Fed, a very like aggressive response in terms of cutting rates and printing more money, and that should be good for things like crypto and Bitcoin. If you do get to that hard landing and you have to switch, but again, it's still tough.
Yeah.
To say.
So gold. What about other commodities? I mean, last year was a pretty big year for commodities in general.
No, absolutely. Again, it was kind of like a roller coaster. Like last year, oil started kind of around here, like 70s, like 80s, then went up to like 120, 130, and then now just came back down to like the low 70s. And so it's been a roller coaster.
Right.
And I do think that fundamentally, we are setting up for renewed strength in the commodity complex. One of those key reasons being the Chinese reopening. Right. That's 1.4 billion people that have been saving money for 3 years. They're starting to travel again. I think once they get through this period of sort of mass infections and get closer to meaningful levels of herd immunity, that's going to be a lot of sort of activity that's going to go back into the economy that should be supportive of the commodity complex. In addition, I generally speaking, like the economy is like okay, like the U.S. is doing fine, the employment market is fine, it's healthy. I think that's also sort of constructive for the commodity complex. And then the last component is really the dollar, right? Every commodity is based on the price of dollars, and I just kind of like I'm a little bearish the dollar here in the context of if you think about what the risks are in the market and it's inflation shooting much, much higher. And the ECB, the BOJ, and other, and those two central banks in particular have a lot more to go in terms of raising interest rate policy and tightening financial conditions. So if we go a lot higher in terms of, inflation, those currencies I think will do better. And then on the flip side, if we get the hard landing and stuff, again, just because of like how far ahead the U.S. is, they're going to be cutting more aggressively.
Earlier.
And so earlier. Or just they're cutting from a much higher level. Right. And so it kind of feels a little asymmetric on the dollar strength side of things. And so if you get a weaker dollar, a Chinese economy that's recovering and sort of continued, strength in the U.S. economy, I think that could bode well for the commodity complex.
Interesting. So, and then I'm looking at equities. It looks pretty tepid out there. I saw big tech is down a bit. Struggling. It obviously has been, frankly, for a little while. Though we had a little bit of a rally in the end of the year. Well, I don't. Does it look anything? Does the picture look different? Or
no. I think the picture is really easy. Our CEO has been pretty bang on about, how he's thinking about the market. And I think it's pretty consistent, with other folks, which is basically like you're assuming, $220 per share in earnings in the S&P this year. That's without forecasts really moving down. And if you apply an S&P multiple of 17, that kind of gets you to where the S&P is right now. We don't really think that multiples are going to expand a lot because, interest rates are really high and the Fed's hawkish. So it's not like, earnings or multiples are really going to expand. And, there's a potential that they can go lower. But that kind of leaves you in a scenario where there isn't that much upside risk to stocks. And the downside risk, is there. But I'm not in the, panic,
doomsaying
camp, etc. But you're just kind of stuck in this place where you're not really expecting much in terms of returns. So really, like, what's the point of taking that risk?
Right.
I'd rather just go into, fixed income or better risk-adjusted products and not take the risk of being long a growth company or being long, tech that's hyper valued and things of that nature. So I kind of think equities just don't provide good risk reward here. And that you're just supposed to wait for extensions in one direction or the other if you're trying to trade it.
So and then back to crypto. I totally understand the current risk appetite environment, and there's a lot of external factors, macro and monetary policy in particular. But at some point, don't you look at these like, if we're talking about the majors, the Bitcoins and ETHs, like, don't you look at these if you have a long-term view at some point and say, like, this might be a good entry? I mean, no one in big capital seems to be thinking that way yet. But so I guess maybe the flip side of the question is like, how much downside risk do you think there still is in crypto? It's hard to know, obviously. So this is more of a.
Yeah, am I allowed to talk about single name protocols?
Yeah, we can talk about Bitcoin and ETH for sure.
Got it, but not. Well, let's just say that there's still a lot of froth in this market, in my opinion.
There is.
There
are definitely a lot of
L1s that are very overvalued
and have very limited usage for sure. The sort of L1 trades from 2021 and 2 still hanging over.
Exactly. There's still tons of meme tokens that have a lot of value that. I think is dubious. There's one that's going crazy on Solana right now. I saw this. For example,
Bonk.
Yeah.
Now this is just a random meme token. I mean, we don't know anything about this.
Apparently there's utility in there. You're gonna get staking. You're gonna borrow against it.
Staking is not utility. Okay.
But right now
that froth is still there.
That froth is still there. So taking a step back, there's my landscape of crypto is, you've got long only types that believe in, the sort of big tokens.
Yeah.
And you've got, the venture guys that are just, playing in the venture arena. Then you've got, your sort of speculators, your professional speculators and market makers. And then you've got retail.
Yeah.
Retail, they're basically not coming back for a really long time. They've gotten hurt a lot. $900 million in Gemini Earn, UST Luna collapse, FTX, Voyager,
Bridge hacks.
Celsius, Bridge hacks, NFTs that have come down a lot in price, meme tokens that have come down a lot in price. It's not just in crypto, but in stock markets, they've also done poorly. So I think retail's on the mend. You've got a lot of, market makers that were taken out on stretchers because of, at the
various
FTX,
collapses,
etc. And then speculators, they're a little bit limited right now because one, they lost liquidity of a major exchange with perps, etc. The lending market is, frozen a lot.
Right.
So, that leaves you with, pro v pro market, which is, speculators versus speculators and, trickles of long only and venture money coming in. But you also have to think about, the supply that's coming into the market. Obviously there's the Bitcoin supply, but there's still venture positions that are unlocking. Yeah, for
particularly on those alt L1s,
correct.
Right? There's a lot of those. Yeah.
And then there's stuff that has to get sold as a function of bankruptcies. So we know about supply, and we know that the speculation in one direction or the other is not going to go that extreme.
Yeah.
And then you have to put that in the context of like, what is the liquidity like in the market? And liquidity is not great, particularly versus like, 3 to 6 months ago.
Yeah.
Even though you might, kind of be deceived, by like the headline figures. Yeah, okay, there's a couple yards of Bitcoin that traded between 16.8 and 16.7.
Yeah.
When it's been trading there for, a week or whatever.
Yeah.
So point is, liquidity's thin. Market participants have shrunk. The pie has definitely shrunk. There's still supply coming in, and there's still tokens that are, in theory, worth probably more than they should be.
Yeah.
And then the kind of other thing to think about is like, in terms of like, what is there to do in crypto right now? If it isn't to speculate, it's to yield farm. But the yield farm opportunities aren't really there, and they're probably not worth it on a risk-adjusted basis right now in terms of smart contract risk, bridging,
especially with all the fixed income rates where they are as well.
Yeah, and you're not getting paid on your stables unless you're farming, and so it's a very tricky outlook for the market. But in terms of like the players in the space and trying to understand the market construct, it's actually pretty clear right now. Yeah.
Very, very interesting. So we're going to be waiting around then, I guess, and it seems like a lot of the markets are pretty, not just crypto, but equities too. We're sort of range bound. Is your outlook for the near medium term?
I think range bound is fine, but the way I would think about it is I think more than any other time in markets, I think you just have to be respectful of like new information, right? Like being data dependent, essentially, like the Fed claims they are. But it's like if you see, unemployment start to tick up massively, like, yeah, okay, we might be going into a harder landing scenario, but I don't think that's the case.
Right, but you got to be focusing on that data.
On the data.
Yeah.
Right? And economic data and little signs here and there. I mean, there's a central bank that hasn't even gotten off negative rates yet, and their bond market has just started to move, and you could cause, there's some pretty scary tail scenarios about, Asia FX and fixed income, if the Bank of Japan really starts going.
Yeah.
And so you just have to be, kind of nimble and data dependent. And that's kind of what I would recommend to folks for this year.
Beimnet Abebe from Galaxy Digital Trading, my friend. Thank you so much. Quick break for our listeners. I don't have a poll this week or anything. So maybe just, take a deep breath, stretch your legs. Thank you to our listeners. Sorry we were not here last week, but we got a lot of positive feedback saying that folks were missing the show. Don't worry, we're here again every week for 2023. Send your feedback as always. Hit me up on social or message us at GLXY Research on Twitter, or send us an email at research@galaxy.com. Always love and appreciate your feedback, and thanks for listening. Let's get back to the show. Welcome, my friend Trey Aslanian, Trey of the House of the Lion, as I like to say. Welcome back to Galaxy Brains.
Thanks for having me, Alex.
Yeah.
First one in camera, so I'm repping my sister's team, Muhlenberg Field Hockey.
Let's go.
Her. Yeah.
This is the first time we've recorded with you in our new studio, and it's fun to have you back. I just figured we'd shoot the breeze a little bit about some crypto topics. I don't know if you've been looking at anything in particular that's been interesting over the break, if you were scrolling while at home with your family.
I'm always scrolling. Just a couple things we could talk about. Maybe like the whole Shanghai upgrade that's due, and then maybe a little Nostr talk.
Yeah, Nostr, interesting.
Yeah.
So Shanghai, we know it's scheduled, right? It's scheduled. Well, it's the content of it appears mostly finalized. At least Christine says, right?
Yeah.
It's withdrawals. It's stake ETH withdrawals. I don't know what was your There was a lot of consternation in the dev community, but then also sort of in the broader Ethereum development community about this. Everybody wants these scalability upgrades and proto-dank sharding and all this, and everyone was upset, I guess. Not everyone. A lot of people were upset that only staked ETH withdrawals will go in. What are your thoughts on that?
I don't know. I think it's always an important push-pull between like the devs and kind of the users. I remember like the initial ETH2 kept getting pushed back, and then finally Justin Drake was like, okay, I've heard enough. Like, you guys have yelled at me.
We're calling it.
We're doing it.
Yeah.
And they got it done.
Yeah.
So I think something similar happened here. I think this is kind of the last user.
It's the last piece of the merge too.
Exactly. So I think people just want to put it behind them.
Yeah, Ethereum developers were getting a lot of criticism. Mostly from like Bitcoin maximalists, but they go from the Bitcoin maximalists have gone from every critique of Ethereum, and they just move on to the next one. At first it was like the merge will never happen.
Yeah.
And it was like the merge won't work. Then it was like, okay, but your ETH is locked up. And so it does feel like sort of like cobwebs and like dirty laundry. They got to finish and clean up and get it all. Because also it dramatically affects network dynamics and supply dynamics.
That's the other thing. It's I would argue it's a security thing, right? Like if you think about all the ETH holders in the world, I think it's like 10 to 14% are currently securing the network. Other proof of stake networks, that's like north of half, even like 2/3.
Right. And you think maybe more supply would come onto stake if they knew they could unstake when they need to?
Yeah, of course.
Yeah.
It's like, you'd have more assets in an ETF than like a closed-end fund. It's just it's more certainty.
Yeah.
And so that'll be really exciting. I think there's a lot of FUD around are people gonna unstake and sell because they're basically being held hostage right now. But I am pretty strongly convicted it's gonna go the other way.
Yeah, that's really interesting. I mean, I can think of a few. I've seen the chart of the average price of ETH when it was committed to the beacon chain by like supply.
Yeah, it's
I
a lot
forget,
of red.
Yeah, I forget, but it is a lot of people are underwater, but a lot of people were in there early. I mean,
Yeah.
the beacon chain launched a couple of years ago.
Yeah.
But also you have to think like these are some of the most hardcore Ethereans, right? I mean,
Yeah.
so like, I mean, the people staking on the beacon chain weren't like, you know, passersby tourists. I didn't think so. I feel like they'd generally be less likely to sell than.
I think there's that dynamic of it. There's also kind of like the exchange staking and kind of the liquid staking derivatives, which is more like I would classify like retail-esque.
Yeah.
If you're not like setting up your own validator, like you probably use one of these services. So like I understand the argument on at least on the exchange side where like that might just get arbed out to ETH. Liquid staking derivatives is kind of its own animal, but yeah, I agree. A majority of them, especially early, were like just die hard, like they're gonna keep it there forever.
So what do you think about the liquid staking derivatives in general? I mean, I've never really fully figured out whether there's a risk, but you're basically like restaking or like reusing the staked ETH, right? Like,
Yeah.
Does that impact security in some way? Like that, like you could have. This is something that always concerned me, but I admit to our viewers that I have not really figured out exactly what my fear is about this.
Yeah.
But it seems, you know, the stuff's supposed to be inert and staked, but then is getting basically pledged as collateral elsewhere, perhaps. Like,
Yeah, there's
some kind of like
and
cascading death spiral or something could happen.
Yeah, no. I mean, they could act maliciously, right? I
Yeah.
mean, that would like destroy the project, and people are
You
generating
mean the derivative, the
Yeah.
LSD projects themselves?
like the actual people who are
Right.
physically staking the ETH.
Right.
You
Yeah,
know-
like if they rugged or something, then all the derivative tokens are worthless.
Yeah, exactly. Which
I was thinking more like if you like have some kind of cascading, like if all,
slashing event, like a
Yeah, I guess it wouldn't really make sense. I was thinking more like if all of these liquid staking derivative tokens are pledged in DeFi and then there's like a mass liquidation, but that doesn't really impact the underlying
with
stake.
with redemptions, like as long as no one's acting maliciously, I think you're fine. I mean,
Yeah.
it's something that I think hasn't been fully flushed out. I know certain projects have looked into because it's usually like a dual token model where you have the governance token and then you have the staking derivative. So it's like, how do those two kind of share governance rights? It's kind of like the same with like the maker holders versus the DAI holders versus the CDP. It's like you have to kind of reach that happy medium.
Yeah.
At this point, I think it's just been like go, get as much market share as I possibly can, and then kind of figure it out later.
Right.
And now we're getting to the size where we're at the figure it out later point.
That's interesting.
So people are starting to think hardly about that.
So what about another one we were talking with Beimnet about was just the alt L1 trade. You know, he says he thinks there's like a fair amount of froth still in some of these alt L1s that have, you know, minimal activity. Activity on chain is declined.
Yeah.
But Bitcoin and ETH still have activity.
Yeah.
Probably like, you know, Binance chain, I'm assuming still has activity.
Oh, yeah.
Right. But there's, you know, we see stuff on Polygon and like Solana's is declining, but there's still some but like outside of like, you know, when you get to the broader ecosystem of layer one blockchains, like it's starting to look to me like, what do we really need these for?
Yeah. And I've said this before, I'll say it again. Like if you're using an EVM, like I'm completely uninterested in what you're doing, unless you're Ethereum, obviously. This year I'm like hyper focused on the layer 2 space, specifically on Ethereum. I think like obviously Optimism and Arbitrum are kind of like market leaders and optimistic rollups. Right. We're going to get the whole ZK complex and maybe Polygon has something to do with that. But what I'm looking at, I think even in more detail, and this kind of comes to head with some of the interoperability protocols, are going to be like these like kind of application specific L2s where it's like, you know, BitDAO, they want to spin up, you know, their own perpetual swap L2.
It's interesting.
Right? Like Ribbon, they're making
Are they all
own,
just going to like fork Optimism, you think, or something like that?
Probably. They'll
Yeah.
fork some kind of optimistic roll up. But
Yeah.
I mean, like if you want like kind of a closed loop application, I think it does most of the job.
I mean, I always liked this idea for L2s. I know there were some gaming companies, like, you know, that have tradable assets in game and whatnot that basically were doing this. Either it was a side chain or an L2 that just like pegs back to ETH. Like they don't run their, you know, I never really liked the thesis that like game developers were going to like build on an L1. It always seemed like you're going to look, you pay for the game, they create all the content. The game itself typically, if it's a standard sort of video game, doesn't need to be decentralized.
No.
And they need to be able to control the assets while they're in their box. But like the hack is then just bridging you back out into the open ecosystem.
Yeah, that's like Arbitrum Nova. It's like a layer 3. We're gonna get to like layer 10 by the time
Lord have mercy.
we're old. Yeah, but the layer 3
It's like
stuff.
layer inflation.
Yeah, right. Yeah, scaling layers. I forgot. That's like a Bitcoin thing though. So.
I know. And then also, I mean, the ZK stuff. Christine has talked a lot about how you can have a roll up on a roll up on a roll up. You really can do that. And so you could have really, truly, I don't know, incomprehensible levels of scaling theoretically.
Yeah.
You mentioned Nostr. So Nostr is, for our audience who may not know, a decentralized social network, basically a decentralized messaging platform that has I guess it can be built on many different ways, but I guess the most popular use is as a Twitter-like feed. The Bitcoiners are all over this. Jack Dorsey's been using it. And have you been on there?
It's pretty slick. I haven't quite figured it out yet, but it's basically like it's public-private key cryptography. Like I can take my account anywhere I want, which is like super powerful. That's something I've been able to do with Ethereum that like I haven't.
You'd like to see in social.
That I'd like to see in social. Obviously, you have kind of like Lens on the Ethereum side and Farcaster, which are more companies. I mean, for lack of a better word, companies than like open protocols. I'm sure they have a whole roadmap to get there, but Nostr right now is decentralized. And that allows for some really cool stuff.
Yeah.
Like it explodes. Like that's what gets me excited about this whole movement. Is like anyone can work on this, and a lot of interesting people already have. So I think by the end of the year we'll have like a working Telegram Notes app. Like we will have the whole suite. I think the battle becomes mobile, which has always been an issue.
It needs to be on mobile.
It needs to be on mobile. They might get some flack from the App Store. I know the main one, Damus or something.
Yeah, Damus.
They had some. The App Store had some
issues.
Some silly issues, I think. So we'll see.
Yeah, the App Stores have like
we gotta make our own phones, man.
I know.
Like,
I agree. I mean, so Nostr, it's like, and again, this is I plead some ignorance here, so apologies if I get this wrong, but. It's like a series of relays that just pass these, signed messages around, right? So you have a private key. There's some fields. I think I looked. It was like only eight like fields in a Nostr message. Very small, compact.
Yeah.
And you just sign a message, and then applications can hook into the relays and display them. And it's pretty straightforward. It reminds me in some ways of like IRC or in these nodes aren't. These relays, they're not incentivized, and I think that's a criticism that like the Web3 community will probably have against something like Nostr, because you always hear that argument that, well, why would these nodes, pass these messages around without being incentivized? That's often been the justification for the introduction of a blockchain, right? But we have long history of decentralized tools like this existing.
For sure. It's like it's a user that uses it, right? Like who's going to run a Bitcoin node? Well, people
Bitcoin
who use Bitcoin.
User. Yeah. I think it's pretty exciting. I have to say too, Twitter has been like not functioning very well. I don't know if you've noticed this. Like you send a tweet and it's like didn't send, like check back later or something. I went the other day. I was in my notifications and like all of them were just gone. And then like 3 hours later, all of them were back. And I'm like, is Elon actually breaking this thing? It seems like he might be.
Yeah, I don't know. I've definitely heard people say that. I literally just refresh my home button, so I'm a very limited Twitter user.
Yeah, have you ever tweeted?
No.
Never tweeted?
No. I like some Princeton wrestling.
You've liked some stuff.
Yeah, that's about it. Yeah.
But you follow a lot of accounts. I've seen your secret account before. I see that you follow a lot of stuff.
Yes.
It's an intel gathering
for sure
operation for you.
Long time lurker.
Yeah, I would love to see that a decentralized thing. We know Jack wanted it, right? You saw the text between Jack and Elon.
Yeah.
Really fascinating, by the way. I cannot believe that saga even happened.
Wild.
All these text messages were released in court.
Yeah.
It's bizarre.
I think that's why I finally bought it.
And there's a bunch of weird ones.
Yeah.
There's a bunch of weird ones. A lot of sycophants cozying up to Elon, trying to curry his favor, and myriad people just offering him advice about what to do with Twitter.
Yeah.
But I think the ones we read these on a prior episode, but the ones between Jack and Elon were very interesting.
Quite.
What do you think about Bitcoin? Like Lightning, have you been following Lightning lately? Is there anything exciting you in particular in the Bitcoin world?
Yeah,
at the moment.
I'm more excited about the Bitcoin world than I have been in a while. Obviously, like the Nostr thing, it's like kind of
It's like Bitcoin adjacent.
It was like, but it's always been my thesis. It's like you don't need everything on chain, and like this is the perfect use case for Lightning. There's a lot of other cool shit like Get Alby.
Yeah,
like
I saw that.
It's
like
login with.
It's like a Lightning MetaMask type wallet. Right?
Exactly. Like I love that shit.
Yeah, it's really cool.
Then you have some perp exchanges like Collider.
Interesting. That's
where you can trade like Bitcoin denominated, and it's like non-custodial.
Very cool. Yeah, like LN Markets too. Right?
Yeah,
that's been around for a while.
That stuff's not totally interesting to me, but it's cool that people are thinking about that.
Yeah, I like the there's one that we're going to dive into a lot more, which is Miniscript, the Bitcoin language.
Yeah.
I don't know a lot about it. I recall Andrew Polstra, the chief scientist or researcher, or head of research at Blockstream, forget his exact title. He at a Boston BitDevs that I went to maybe in 2019, he gave a presentation on how he was working on it. It was very interesting. I'm told it's complete and merged into Core already, and no one knows about that. So we're going to have a guest in a future episode to explain what this means. But what my understanding is, there are significant feature additions basically through the transaction language, which doesn't require any kind of fork. It's just a way to compile new information down into Bitcoin transaction format that actually has some really powerful implications for things like vaulted transactions or time locks that make it really interesting. So I just learned about this. I actually recall that, like I said, I learned about it a while ago. I totally forgot about it. As far as I can tell, very few people are working on it, but we're going to have one of the people working on it come and explain what it is. I think that could be very interesting.
Yeah, I need to do my homework on that. That sounds cool.
I've got a doc I'll send you with a bunch of links. So
nice.
I don't know, anything else that you're like particularly like interested in? I mean, what's DeFi look like these days in your mind?
The DeFi stuff is still working on bringing some of like the really good stuff about centralized exchanges on chain, and I think that's likely done. Kind of what I was saying earlier in like the application specific like layer 2 format. I mean, all you need is a matching engine and a shared order book. So it's like fundamentally, if there's no fiat involved with the trading, like there's no reason why it shouldn't be on chain. So I think we'll continue to see that, like the GMX of the world. It's kind of like, it reminds me of the AMM versus like central limit order book.
Yeah.
Where it's like our brains are so wired to think, oh my God, central limit order book. Like obviously as, a trader on the desk, like I need to trade in that, but user experience wise, like AMMs are way better. And I think we're finding like something similar with GMX where it's like they're on DYDX's tails, and DYDX has been around for a while.
Yeah.
And so we've seen like forks of that, and eventually it's like who pays the winners, right? And it's
interesting.
Like the GMX, you have this like variety of assets with like something like Gains Network. It's just like you post DAI, and it's you're trading against that fund.
Super interesting.
So I think that's probably going to win out again, which is kind of wild.
It's so weird.
Yeah.
What about you see like the Winklevoss letter that they sent to DCG?
I did.
Pretty spicy.
It was very spicy. They're definitely feeling the heat.
Yeah.
What I'll say about that is obviously I'm no inside baseball, but these things tend to take a really long time to iron out, and I don't think this case is any different.
It looks pretty complicated.
Yes.
All right, one or two more topics. One of our favorites, Sam Bankman-Fried.
Oh boy.
I was upset. I wasn't in New York yesterday when he appeared in court.
Yeah.
I saw the video of him squeezing his way past all of the throng of paparazzi.
Yeah.
He pled not guilty to all charges. But he also his lawyers motioned to keep the two unknown co-signers of his $250 million.
They signed off on it.
Personal recognizance.
Meanwhile, all those people in
secret.
Celsius, BlockFi had their addresses doxed, their names doxed.
Well, and FTX creditors also are having their names and info kept private, at least for some amount of time. Trey's looking at the block clock; it's changing.
Yeah, sorry.
No worries. But I believe news organizations have already petitioned to have that lifted. But this isn't a bankruptcy; it's different.
Yeah.
the U.S. government didn't oppose the motion to keep the two co-signers secret. So as far as I understand, there's basically a very low likelihood we'll ever find out who they are. Very weird, though, because
Maybe when Sam writes his tell-all
we would
memoir
want to know.
from the can.
Yeah, don't you want to know? I want to know.
Of course.
Right? I mean, I'm not going to speculate about who it could be.
Yeah,
okay?
I know,
But like there's a bunch of categories of people it could be.
Yeah.
And all of them are interesting.
Yeah.
And I want to know. It could be former other FTX employees that are wealthy and didn't commit any crimes. I think that's probably unlikely, but it could be friends of his parents, right? Who are big political fundraisers and professors. It could be who knows, right? I mean, I want to know though. This is the largest such personal recognizance bond I believe ever.
Really?
And yet as far as we know, like a $4 million house was posted.
Yeah.
I don't know. Like this was really irking me. You think Sam's gonna? What's he doing? They got his internet. He tweeted.
Yeah. No, is
he chilling? Is he playing video games?
I think he'll probably be restrained from going on any more Twitter Spaces, but he's definitely playing a lot of video games.
Yeah.
Was that when he played League of Legends? Or
Yeah. Apparently, he's not that good at it, which is funny because people said he played it all the time.
In hindsight, man. In hindsight.
I know, right? People were like, he must be a League of Legends legend.
Yeah.
He's like, I don't know what the tiers are. I don't play League of Legends, but
he was
like bronze,
which is apparently bad.
Yeah, it sounds bad.
Yeah.
It sounds bad. Anything else on the exchange space, like that you're following? I mean, what about the proof of reserves we've all seen? Like,
yeah.
Does that excite you?
It's helpful. It's helpful. I think if there is kind of regulation in 23, which I'm somewhat skeptical of, just given what's going on in Congress right now. I think they're a little preoccupied.
Can't even pick a speaker.
Yeah. The longest one, by the way, has gone 3 months for a speaker.
I read that. It was like in the 1800s. They said it had over 100 rounds of voting.
So they got their own stuff going on, but I think on the exchange side is probably where we'll see some kind of mandatory like separation between kind of assets where it's weird in the crypto space now where you just like send it in, take it off. Like it's
so weird.
Yeah.
But it's easy.
Super easy.
But it requires a lot of trust. Yeah. I think that'd be good. I think proof of reserves or like omnibus versus segregated accounts. And
I mean, BitMEX is kind of the gold standard for all that stuff.
Yeah.
So they like
just to BitMEX. This is again, I hate to always have to say this, but Arthur and the charges and whatnot and stuff with BitMEX and the public notwithstanding, BitMEX has been an exceptional steward of the Bitcoin blockchain.
Oh, without a doubt.
They have, I think, among the best proofs of reserve that they've created. They did little things like they used to send all their transactions, 8 a.m. in a batch transaction. So they used like the littlest amount of block space.
Yeah.
There were other exchanges I won't name who only added transaction batching very recently and used to send a separate Bitcoin transaction for every withdrawal.
Yep.
So like they've done a whole bunch of stuff like that that has always been BitMEX research. Johnny Beer there. I mean, we've got his book actually right here.
There you go.
Block Size War.
Can read it in an afternoon.
It's a great book.
Page turner.
Yeah, page turner. It's a great Bitcoiners over there at BitMEX still. We could go into BitMEX too because you've been trading these markets for years. I mean, BitMEX has been a roller coaster.
Yeah, that was the mecca back in the day.
Remember, was it March 12th, 2020? Bitcoin's like spiraling from like 6 to like 3,200 or something.
They had server issues.
Yeah. They said they got like DDoS attacked.
Yeah, something like that.
You think they pulled the plug?
I mean, if they did, I would say thank you.
Yeah, exactly. There was like a cascading series of liquidations.
Yeah, there's $20 million on the bid.
Yeah.
Till zero.
Yeah.
And the network was so backed up, just given all that was happening, like you could not send Bitcoin in to arb that back, right? You send Bitcoin in, you buy it there, and you sell it elsewhere.
Right.
Couldn't do it.
Lots more we could talk about, Trey, but I really appreciate you joining us here on Galaxy Brains today. Thank you so much, man.
Thanks for having me, brother.
Trey Aslanian, Galaxy Digital Trading. Thanks to our guests, Trey Aslanian and Beimnet Abebe from Galaxy Digital Trading. Good conversation there. And thank you for listening, as always. It's a new year. We've got a lot going on. We're going to be covering it all, and there's a lot happening at Galaxy, so stay tuned. That's all we have this week for Galaxy Brains. Have a great weekend. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email Read our content at galaxy.com/research and follow us on Twitter at GLXY Research. See you next week.